Happy New Year, everyone. Hope everyone is having a great start to 2024. As we jump in, we'd like to take a second and look back at 2023. 2023, we saw the stock market rally that began at the end of 2022 continue on through 2023. The first 3 quarters of the year, as we mentioned previously, the rally and recovery is really being led by a few tech companies. The good news is in the fourth quarter, we saw the rally and recovery beginning to broaden, meaning we saw companies besides the tech companies, talking about small, mid-cap stocks, start to recover and really provide a second boost to the recovery in 2023. In other positive news, we saw inflation begin to tame, and Federal Reserve President Jerome Powell indicated that they believe they're on a path where they will not need to increase interest rates anymore. In fact, they project they'll be able to be cutting interest rates in the second half of 2024. As we look into 2024, the big elephant in the room, the big story is most likely going to be the election. This year, like every other year there's an election, we should expect that we're going to see increased noise, increased volatility in the markets as investors react to different talking points that they hear during the election cycle. In fact, Investopedia's reader survey has indicated that the election is a top concern for investors in 2024. The good news is historically the markets tend to do pretty well in election years. With 10 out of the last 12 presidential elections, the S&P 500 finishing in positive territory. The key will be to remain above the noise and not allow emotions to start dictating investment behavior. One of the talking points that we'll probably hear throughout the year is inflation and interest rate risk. While the Federal Reserve has indicated they believe they're done increasing rates and will begin cutting rates, that is not a guarantee. As the Federal Reserve showed previously, if inflation is not on the path that they like, they are not afraid to get more aggressive increasing rates. If that were to happen, we would expect the market and the bond market to pull back. With higher interest rates, there's also a risk to the economy with the interest rate payments. With the increased interest rates over the last few years, we saw the amount of interest the U.S. is paying on its debt increase from $350 billion to over $600 billion in the span of 2 years. This year, the U.S. government has an additional $7+ trillion maturing that will need to get refinanced and most likely refinanced at higher rates. This is another area that could be a big talking point within the presidential cycle and election cycle, and could be one that causes some nervousness. With interest rates being elevated for the last several years, we saw a big influx into cash assets, meaning money market funds, high yield savings accounts, CDs, etc. In fact, $1.2 trillion went into money market mutual funds in 2023 alone. And as of the end of 2023, the U.S. households were sitting on about $1.7 trillion of cash assets. A potential positive for the stock and bond market is if interest rates continue to come down and yields start to come down, we would expect households who were holding these cash assets and earning 5+% yield to start to redeploy those assets into the stock and bond market, potentially providing another boost to the rally. Another big story that came to an end was the pullback in the bond market. After 24+ months of bonds getting hit pretty badly, we saw the bond market began its recovery in the fourth quarter of 2023. This recovery was led by, the belief that the increase in interest rates are done and that the Federal Reserve will start reducing interest rates. So after a historic run of the bond market seeing historic pullbacks, we started to see the principal value in bonds starting to recover. So as we look forward into 2024, one of the big focal points is to really remain sound in investment principles, that we do not want to get caught up in any of the noise, that we should expect to hear increased noise and negativity as we enter our election cycle, and really rely on sound investment principles with diversification, focusing on quality, and allowing our financial plans to drive our investment behavior. Hope everyone has a great 2024, and look forward to talking with each and every one of you in the future. Thank you.